Why do people set up LLCs in other states? While an LLC can be formed in any state, there are several reasons why business owners might choose to incorporate their LLCs outside of their home state. These reasons are influenced by state laws, tax regulations, and business climate. Let's break down some of the key motivators behind these decisions. Number one, business friendly states. Many business owners establish LLCs in states known for their business friendly environments. Some states offer specific advantages, such as no state income tax, lower fees for incorporation, or fewer regulatory hurdles, which may help companies save money and operate more efficiently. One such state is Delaware. It's been known as a corporate haven. Delaware is often the most famous example of a state where business owners choose to incorporate their LLCs. It has long been known as a corporate-friendly state due to its favorable legal framework and tax structure. Delaware is home to the Court of Chancery, a specialized court that handles business disputes. This court has a long track record of making business-friendly decisions, which attracts business owners who want certainty and predictability in their legal matters. What about the tax benefits? Delaware has no sales tax and it only charges an annual franchise tax for LLCs. This is often much lower than the fees or taxes imposed by other states. While Delaware imposes a state income tax, it is not levied on LLCs that do not conduct business in the state. Delaware also offers a level of anonymity to LLC members and managers. You do not need to disclose the names of members or managers in the public record, which may appeal to those seeking privacy. So let's talk about an example. A startup with national reach that plans to raise venture capital might choose Delaware because investors are often familiar with the state's corporate laws, making it easier to attract that investment. In what other states do entrepreneurs form LLCs? Nevada. It's a state with no state income tax. Nevada also has tax-friendly laws, especially because of its absence of state income tax. Like Florida and Texas, Nevada does not impose a state income tax on individuals or corporations, making it appealing for business owners who want to minimize taxes. Nevada is also known for its business-friendly environment. Nevada offers minimal restrictions on business operations and management. Nevada also offers strong privacy protections with no requirement to disclose owners or managers of an LLC. It is also known for its strong asset protection laws, which make it harder for creditors to seize business owners' assets. Let's go through an example. A small business with high revenue might incorporate in Nevada to take advantage of the no income tax law, reducing its overall tax burden. So, what other states are entrepreneurs considering? Wyoming. Low fees and strong privacy protections. Wyoming, while less famous than Delaware and Nevada, has grown in popularity for forming LLCs, especially for those seeking to limit personal liability and maintain low operating costs. Wyoming offers low filing fees, which can make it an attractive option for business owners looking to minimize the upfront costs of incorporation. Like Nevada, Wyoming does not impose a state income tax, making it an attractive state for LLC formation. Wyoming LLCs do not require the disclosure of members or managers, which can help maintain privacy. So let's say you're a freelance entrepreneur who wants to separate your personal finances from your business operations, meaning you might choose Wyoming for its low fees and privacy protections. Some entrepreneurs may choose to set up their LLCs in states with fewer regulatory requirements than their home state. For example, if an entrepreneur operates in a state with strict employment laws or higher fees for business licensing, they might choose to incorporate their LLC in a state with fewer business regulations. So as an example, an e-commerce business owner in California, where business regulations and taxes are relatively high, may choose to incorporate in Wyoming or Nevada, where they will face fewer state-specific business regulations. But if you want to find out about the downside of having a registration in another state, make sure to catch that video right there. Certain states like Nevada and Delaware offer enhanced asset protection laws that make it harder for creditors to go after a business owner's personal assets in the event of a lawsuit. These protections can be especially attractive to those running businesses with significant potential liabilities. So what about series LLCs? Delaware, Nevada, and Wyoming offer the option of creating series LLCs. This allows business owners to set up separate cells within a single LLC, with each cell protected from the liabilities of the others. So what do I mean? Check out this diagram right here. You have your main box at the top and smaller boxes at the bottom. So what are the risks and challenges of setting up an LLC in another state? We covered the benefits of setting up an LLC in a state other than where the business is operated, but there are also significant risks and challenges. These can complicate business operations and increase costs. Number one, the need for foreign qualification. One of the biggest risks of setting up an LLC in another state is the need for foreign qualification in the state where the business actually operates. Even if the LLC is registered in a state like Delaware, Nevada, or Wyoming, the business will need to be qualified to do business in any state where it is conducting operations. So what does this process look like? You file as a foreign LLC. In states where the business is physically located or where it has significant business operations, the LLC must file to be a foreign LLC. There are also extra fees associated with foreign LLCs. These fees vary from state to state and could negate some of the tax savings and cost benefits initially anticipated from incorporating in another state. So here's another example. A business owner who forms an LLC in Delaware but operates a brick and mortar store in Texas must file for foreign qualification in Texas, which requires paying additional fees and submitting paperwork to the state of Texas. If the business fails to do so, they could face penalties. So as you can see, there's increased complexity and administrative burden. Managing an LLC in a state other than the state where the business operates can also increase the administrative burden. Business owners will need to keep track of various filing requirements, tax obligations, and compliance rules in multiple states. You also have to deal with multiple tax returns. Business owners may need to file tax returns in multiple states, even if they are not operating in that state. For example, if an LLC is formed in Delaware but doing business in California, it may need to file taxes in both states. There's also registered agent requirements. Most states require LLCs to maintain a registered agent in the state where the LLC is formed. This adds another layer of complexity and potential costs, especially if the business owner is not physically located in that state. There's also legal complexity and risks in lawsuits. You see, operating an LLC in a state different from where the business is located can also complicate legal matters if the business faces a lawsuit. Why? Well, because of jurisdiction issues. If a lawsuit is filed in the state where the business operates, the state court may not have jurisdiction over the out-of-state LLC. In such cases, the business owner could be forced to defend the lawsuit in a different state. So as you can see, setting up an LLC in another state such as Delaware, Nevada, or Wyoming can offer significant advantages, including tax benefits, asset protection, and a business-friendly regulatory environment. However, it also comes with risks and challenges such as the need for foreign qualification, increased administrative complexity, and potential legal issues. For business owners, the decision to incorporate in a state other than where they operate should be made carefully, taking into account not only the benefits but also the potential drawbacks. While forming an LLC in a state like Delaware may offer advantages for large corporations or businesses seeking venture capital, for smaller local businesses, the costs and administrative burdens may outweigh the benefits. Ultimately, the decision of where to form an LLC depends on the specific needs of the business, the type of operation, and the long-term goals of the entrepreneur. While fully understanding both benefits and risks and considering relevant state laws, business owners can make a well-informed decision that maximizes the potential for success and minimizes the complexities of running a business. If you want to learn more about LLCs and the protection they offer, please make sure to check out this video right here because it's a great follow-up and continuation to what you learned in this video. I look forward to seeing you, and don't forget to subscribe and give me a thumbs up if this video was helpful.